Your thoughts on what we have seen in that particular segment of the equity market, a rather large segment of the equity market, in the past 3 weeks?
Well, at its peak, the NASDAQ was up 40%, and during its correction, it went down about 11% and was 29% up for the year after that. So it's hardly a major correction. I think what we're seeing now is a focus on the future, and as a result of that, as we see treatments for the virus come, ever nearer, we're going to see a rotation of this economy and focusing on, as you've already talked about this morning, materials and ultimately small and medium-sized industrials, and then finally the emerging markets. The closer we are to treatment, the more we're going to see a rotation into cyclical stocks, those that indicate sort of the next phase of this recovery. And that's why I think you're seeing some tech jitters. They've done extraordinarily well. They're extremely highly valued. And of course, they've brought in, really the next 3 years of revenue to this year as a result of the virus and the huge benefits that technology companies have brought to the economy.
But David, the key question here is if we rotate, and I think everybody agrees it's feasible, is it a rotation on an absolute basis or a relative basis where tech participates even with the rotation?
Yeah, I think that is the question, Tom. And the answer from our standpoint is that it actually doesn't. Let's assume, for example, that the S&P was up 7% next year. You might have tech give back a small amount because, again, they're not going to lose a lot of share here, but you're going to see the other sectors rotate and do far better than the average. So, what we're advising our clients to do right now is to actually cap the amount of technology, cap the total amount of tech, media, and telecom in their portfolios, and begin to deliberately rotate into these lesser valued areas now, anticipating what we just talked about.